All right, so welcome to another video. Today we're going to take a look at Adobe. Adobe just had recently earnings, and I want to share with you some thoughts. Keep in mind, it's not a recommendation for anything, but if you do want to get some input and insight, definitely check out our website at tradersfly.com. There's a lot of great freebies there. You can also check out the coaching session and some other great courses and live classes that we have coming up. One of them is coming up on market seasons and trading options. Okay, so we can also go in and take a look at Adobe here. Now, Adobe has had a little bit of a tough earnings suggestion here, saying that the earnings will slow down here, although the CEO says, hey, it's all good quarter after quarter, right? Looking at last year's, things are looking good, but they're stopping some sales in Russia and that kind of thing. There's also a lot of new competition coming in, like Lightricks. What they do is, change videos and change the editing for a lot of the images. Now people do it on the phone, so less so involved with Adobe. There's also some stuff like Canva, like you're going in and designing graphics apps. So it's a lot of a cheaper alternative. Like people are getting specific apps for, let's say, Facebook or social media or whatever, rather than a big design platform. So they're kind of doing it on their own. And doing it with cheaper software like this. So when we look at Adobe here and you just look at what's going on, the stock is selling off quite a bit. It's about down almost 9.3, almost 10% here. And that doesn't look good. However, if we look at kind of just the technical levels where the stock was, it was around $700 back at market peak. Now we are down about 40% from those highs in about 3.5, almost 4 months. So you are getting a fairly significant pullback here in the stock. I think one of the few levels and things to watch, just looking at this stock month after month, the stock has been doing fantastic. And well, just look at this line here. Just overall, you've been trending higher. The problem right now is that this line right here, as we take a look at it, is starting to break. So this is not necessarily good or healthy. So that is a little bit of a problem. So you do want to watch out a little bit in what's going on here. You also see some bearish volume building here. So also not the greatest. So can the model still be sustained from a professional level? Yeah. But where will it pull back to? Will we get into this level? I probably don't think the stock will be down in the 30s unless we just get a nasty market crash. So I doubt we'll be in that level. I don't think the stock is going to go to zero because then it's just not worth anything as a company. So again, where is the right value? And that's what the market tries to do and tries to kind of work through. So I think from a shorter term perspective, what we're kind of watching is right around this $400 level. It's a nice round number. The stock already is playing around that range, and it's already slowing down its descent, right? We had a sell-off, quite a bit of a sell-off, and now we're kind of in that zone. So right now, what you're seeing is rather than continuing this sell down action, you're getting kind of like a little base, kind of like what we've had here in January. There's a little bit of a base here. It's starting to create a little of a base. So the more of these bases you're creating, even though it's stair-stepping downward, here's a base and stair-stepping downward. Even though we're doing that, the bases are starting to get longer. So notice this base is a lot longer than that base and this base. So they're starting to create a little bit of a longer base, and that's usually a healthy positive sign. Also, you're starting to see a little bit of this rounding area, and that's because of the bases starting to get longer. So that's why I say from a shorter term, this 400 seems to be a fairly significant level. We also played a lot around this 450 in the past, so that also will play quite a bit in the stock. So it's kind of still in that range where people might be buying the dip. So as we start looking at that, if we continue to sell off, I'd watch this high peak point in the past. That's right around that $380 price point. And if that sells off, then you're probably looking at the $300 price level. Now, I don't know. Chances are it probably won't get to that full $300 price point, but that's kind of like extreme levels. So we're watching a few of these levels from a longer term perspective. I think short term we're okay around this 400, but these are some of the other levels to watch. If we start getting a pop and move to the upside, obviously the 500s to watch, because you can see what's going on is that the 500 level, we played around that zone quite a bit. So that's kind of what I'm watching in the stock right now. I think it's just too early to jump in after earnings. You normally want to wait 3 to 5 days. If you don't wait that far, the stock could continue moving lower, and then you'll see, hey, what's going on and what's happening at that point. So give it a little bit of time and room to just kind of base and play and do what it needs to do. So you can see, is it basing? Is it starting to roll? Are we selling off further? And that's what I'd kind of watch in this area. So anyway, From a general perspective, could you start nibbling a little bit on this stock? Yeah, maybe, but just be a little more careful with it because we still are just new after earnings. 400 is still about 23 points away. So that's a little bit of a problem still. You do have a stock also that's just very extended from, 2012. If you look at just the normal trajectory right here, these last few points from 2009, you should kind of be in this zone when we're looking at it, and that'll put you more around, current price level, about 103, but that is considering kind of slower growth. So if we look at more of the newer accelerated growth, and you start kind of drawing this out, now should be keeping in line right now with the current growth, and it should kind of hold at this level. However, remember, stocks when they're going at that same level, doesn't always go that way. They get overbought and then they get oversold. So if we got oversold by this much, right, and we measure the distance, if we got overbought there and now we measure the oversold, we're kind of looking at maybe about 275 at that level, where now that stock is looking for a much more favorable area, right? So we measure that distance and you measure that distance. So overbought, oversold. You could use Keltner channels for these kinds of things. So if I go in and do something like this, and we go into the weeklies, and you kind of get an idea, you can see we're kind of moving on this downward path, and then we can get into that 3 standard deviation level. Here's the monthly area. So there we go. So we got into that third range. So we're not in the third range yet, and you can see right there. So we're kind of looking at somewhere around there. If we get that's the middle area, overbought, oversold. So if we get oversold, yeah, you're probably looking at maybe around the 300 level. So anyways, those are some of the things I'm checking out from this stock perspective. Feel free to join me on the Discord channel. That's where I answer a lot of questions and post some stock movers as well and charts. So check that out here in the link in the description. And also watch out for some of the great freebies that I have on our website. Join the newsletter list by grabbing them. And you can check some of those things out as well. All right. So thank you so much for joining me. Enjoy the rest of the week ahead. I will see you next time. Don't forget to subscribe if you're brand new.